Let's also put the focus on FMCG major Marico posted a strong set of second quarter numbers. In fact, we have the management joining in as well. Saugata Gupta, MD and CEO at Marico, joining us on the channel. Thanks very much, Mr. Gupta. Appreciate your time. How has the quarter been for you? While the headline numbers definitely do look good, operating margin saw a bit of a contraction this time. So could you run us through the key highlights then?
We had a good top line of 20% and a good bottom line growth. Operating margins, a little slight contraction was because we still face some inflation headwinds which are now coming off because of a significant reduction in one of our main raw material, which is copra. As far as volume growth is concerned, 6%, it could have been tad a little higher, but we believe that we have the building blocks in place to deliver a 8 to 10% volume growth for the full year and a constant currency double-digit growth in the international business. Going forward, obviously, we would have some raw material cost advantage with copra entering the deflationary cycle. Having said that, we will pass on some of them in terms of benefits to the consumer, which is important, and also we perhaps plow back to A&P. We believe that we have a very power-packed new product pipeline now. We are test marketing a lot of initiatives, and we believe that we will need perhaps a little bit of extra A&P to drive growth and change the trajectory of our premium portfolio.
All right, you should be able to pass on the reduction then in input cost. Definitely would be good news. If you could take us through the segmental performance in the quarter gone by as well.
So Parachute, which is our flagship brand, grew by 8%, which is in line with our long-term growth. The value-added hair oil business, we perhaps was a tad lower at 5% because of the CSD, where the performance was significantly below par. So the value-added hair oil ex CSD is 10%. We believe in the value-added hair oil. CSD should be reasonably back on track, and we should get back into double-digit growth as far as value-added hair oil is concerned. Saffola is been a work in progress in terms of recovery. We did 5%. It will take some time for it to get back into double digits. And I think some of the new initiatives are doing fantastically with upwards of 30% plus growth in foods, male grooming and premium hair care, which is serums. We are pretty excited about some of these initiatives which we believe are entering the point of inflection.
All right, in terms of volume growth then, what is the outlook if we look ahead to the full year fiscal 19?
I think the India business, we will be in a position to deliver 8 to 10%. We are aspiring to do that for the full year, and a double-digit constant currency growth in the international business.
All right. How did your international business do, if you could tell us this quarter? A few more details on that front, and what is your outlook for the full year, for the full fiscal 19 as far as the international business goes?
I think over the past few years, and definitely in the past quarters or so, we had tremendous investment in developing organic growth capability in the international businesses. So we are now extremely confident of delivering steady growth in the international business. All our markets have done well, delivering constant currency double-digit growths other than South Africa. And we believe in the balance half of the year, Bangladesh, Southeast Asia and Middle East, North Africa are in a strong position to deliver double-digit constant currency growth and deliver continuous, consistent performance.
All right, now we can expect, of course, that the kind of rupee depreciation we've seen from the start of the year has helped realizations as far as your international portfolio is concerned. What exactly was the kind of contribution?
It's very marginal, simply because of the fact that our international business contribution is only 22%.
All right, point taken. Then overall, if you could put it together for us, what is the outlook that you have for fiscal 19?
So I think there would be a steady performance. We aspire to deliver 8 to 10% volume growth for full year FY19, and also in terms of delivering double-digit constant currency growth in the international business. There could be slight margin expansion in the second half of the year.
All right, thanks very much for joining in. Appreciate your time. That's Saugata Gupta of Marico. It's a good set of numbers that have come in for Marico. The second quarter, a good one for them. Revenue saw an uptick of about 19.6%. EBITDA margins came off slightly, 16% versus a comparable figure of 16.9%. EBITDA saw a growth of about 13.5%, while PAT jumped up by 18% in the quarter gone by as well. That's the management for you. The stock too trading near about the highs of the day. It's a good day of trade for many of these FMCG majors as well. But let's bring you some exclusive details that we're picking up from